today with the major indices showing both gains and losses as investors reacted to the economic data, corporate earning, and broader market sentiments. The Dow Jones Industrial Average declined by 82.55 points, that is a 0.25% rise, reflecting some cautious that among investors, possibly due to the concern over inflation, interest rate hike, or global economic uncertainty. On the other hand, the broader market saw strong gains as the S&P 500 advanced 27.23 points, that is a 0.49% gain, indicating solid investor confidence in the large cap stock. Tech-heavy Nasdaq stood out with an impressive rally of 212.35 points, that is a rise of 1.22%, also signaling that the growth stocks, particularly in the technology sector, continue to perform well amid the optimism about the AI innovation, machine learning, and the strong corporate earnings. The Russell 2000, which tracks small cap stock, posted a modest gain of 2.87 points, that is 0.14%, suggesting a relatively stable outlook for smaller companies despite the fluctuating economic environment. However, the market volatility was a major taking point as the VIX, that is the volatility index, surged by 9.99%, indicating increased uncertainty and potential market fluctuations ahead. The spikes in the VIX may have been a sign that the investors are preparing for the future economic data releases, Federal Reserve decision, or geopolitical tensions that could impact market stability. Looking at the international markets, North America and the Latin America performed positively. In Canada, the S&P TSX Composite rose by 175.14 points at 0.72%, while the S&P TSX 60 climbed 9.30 points at 0.64%, reflecting the strength in energy, mining, and financial sectors. In Brazil, Bovespa gained 356.15 points, that is 0.29%, showing resilience in one of the Latin America's largest economies. Chile's S&P IPSA edged up by 0.58 points, that is why the Mexico S&P BMV IPC made the most notable, moving among the Latin America markets, surging by 530.33 points, that is a 1.03% rise. The strong performance in the Mexico may be driven by positive economic outlook, trade development, or investor confidence in the key industry such as manufacturing and export. Overall, today's market movement indicate a continued divergence between different sectors, with technology stock leading the gains, with some blue chip stock face selling pressures. The sharp rise in the VIX suggests that the investors are keeping an eye on the economic data and the central bank decisions, which could shape the market trends in the coming weeks. The commodity market saw modest gains and mostly downward movement today, with the declines across the energy and metals, while the agricultural commodity remained stable. WTI crude oil dropped slightly by $0.45, that is minus 2.1%, selling at $67.54, while the Brent crude oil also saw a minor decline of 0.12, closing at $70.33. The dip in oil prices may reflect concern over the global demand, potential supply crisis, and the geopolitical factors that are influencing the energy markets. Meanwhile, the natural gas experienced a sharper decline of $0.05, that is a minus 1.15%, trading at $4.04, possibly due to shifting seasonal demand or oversupply concerns. In the precious metal market, gold declined slightly by $1.50, hovering at $2,945.30. Despite this minor pullback, gold remains nearly its 52-week high of $2,974, indicating continued investor interest amid economic uncertainties. Silver followed by a similar trend, dipping 0.07 to reach $33.67, likely tracking movement in the broader market sector. These declines in the precious metals may be influenced by a strong stronger US dollar or shifts in the interest rate expectations as the investor assess the Federal Reserve policy signals. Agricultural commodities, however, showed resilience, with the soya bean posting a slight gain of $0.01, that is to reach $10.02. This positive movement may be linked to the supply-demand dynamics, weather condition, or export activity affecting the crop prices. Overall, today's commodity market reflects a cautious sentiment, with the energy and the metal facing slight pressures while the agriculture remains steady. Investors are likely keeping a close watch on the macroeconomic indicators, central bank policies, and the geopolitical development that could influence